We're going to go with our first scenario, which is going to be an employee that makes $60,000 a year and who has about $10,000 in federal withholding. So let's scroll down. We're going to select this person as single, and they will say they have a job. For this scenario, they don't have any dependents. And we're going to go through. They have one job, it's a salary job, and they've had the same job all year. We're saying they get paid every 2 weeks, and their last pay period ended 2024, and then they got paid 12/20/2024. And we're going to say the wages for this pay period is $2,000. And we'll say that their wages year to date, which you'll see on their pay stub, is $58,000. So actually, I'm going to put 60,000 because that's what I want to make. $60,000. Yes, that is correct. Now we're going to go over their federal taxes paid, and their federal taxes paid year to date would be $10,000. And the pay period would be $200. And federal taxes paid year to date is $10,000. Just to make this a nice round number. For the sake of ease, we're going to say that they did not contribute to a Roth 401k. You would put this on there because, of course, this is something that will impact your taxable income. Same with your health insurance. But for the sake of this, we're going to say none of the above. And we're going to say this person doesn't have any self-employment taxes. No additional withholdings, no additional estimated tax payments. So once we go through that, the adjustments to income, I generally advise people to use their prior year stuff if they're not sure about what they deducted or added into those accounts, especially because if it's pretty consistent year over year, it makes it easier for you to estimate that. So for the sake of this, we're going to just say no. And for this person, we're going to do a standard deduction, $14,600. If you find that your mortgage or the charities that you make year over year would be higher than this, then I would suggest you put those itemized deductions in there. Next, tax credits. Of course, this is dependent tax credits if you have a child or you pay for their daycare. A lot of these things are pretty unique. If you have these things, you would know by using like prior year taxes or consulting with your tax professional. For this person, they're just an employee and they're curious to know what their withholdings are. I'm going to just put in my age. Put next. And here you'll see that this person has a projected refund of $4,781. Just based on everything that they have, this was their projected tax obligation. So they can see that they're going to get a refund. So this is scenario one. This is a person who made $60,000 this year, had withholdings of about $10,000. And here is their projected tax refund based on the information you have in here. So if you look back, you can see all of the detail that we put in here, the pre-tax income, the total federal withholding, no deductions, their taxable income, and of course the tax before credit. So they're going to get a pretty big refund back, and this is good to print out. And next, we're going to go through the next scenario. Here we are in our next scenario. So this scenario, we are going to assume the following. This is a person who has basically, let's say that they resigned from their job to pursue their full-time career in their business. So we'll say halfway through the year, they resigned their job. We're going to go with that $60,000. So you've only held this job for a portion of the year. And we're going to say from the 1st to the middle of the year. So that's the 30th, 2024. We're going to say this person has self-employment income. Oops, sorry. Expect to hold this job this year. Make sure this year. There we go. That makes more sense. 6, 30, 20. There we go. So we've made $30,000 in this job, and we're going to assume half the amount that we said last year. We're going to say none for this, and we'll say the remaining amount of self-employment income will be of that other $30,000, just for ease. And if you did not withhold anything or make any additional tax payments, we'll just put zero. But for the sake of ease, we're going to use that $60,000 that we talked about. So we're going to say that they paid $5,000 towards their taxes, right? So half of this money was in salary and the other half net was $30,000. And so we'll click next, keep all of the scenarios the same. If you pay for if you pay for your health insurance as a self-employed individual, you will select this and put in the amount that you pay towards health insurance because that is deductible. Same with self-employment or a SEPS plan. You'll put that in there as well. You'll notice that these things are available in this scenario. And the rest of this, again, we're just going to keep this blank for the sake of what we've done. Standard deduction is still the same because the person is still single. And we're going to go with the standard deduction. I'm going to put my age in. And all of these things will be the same as the last scenario. And let's see what this looks like. Okay, so your refund has gone down. And you might be wondering, what's the difference between making $60,000 at my job versus making $60,000 between my job and self-employment? You'll notice that self-employment income is taxed at, in addition to like your income tax, you have to pay self-employment tax. So that's where that extra money went. So this is this scenario. I'm going to do a third scenario just to show you, but this third scenario, I actually suggest you talk to a tax professional, but we'll do this as an exercise, the third scenario. Okay, so we're going to start over. We're going to go to the calculator. Now, I don't suggest you do this in the calculator. I'm doing this as an exercise. I actually suggest you talk to a tax professional. And the reason for this is because this calculator is not actually made for this part. And this is what I'm going to say. So if you are a self-employed individual and you don't have any job or no W-2 withholdings, then this calculator would not be for you. So if you were to say, oh, I actually don't have a job, I'm self-employed, you click no, it'll stop you from calculating your withholding. But for the sake of what we're doing, we're going to click yes, just so I can show you what that scenario looks like. For my clients who are self-employed, I have a specific tax estimator that I use internally to help them estimate their taxes. But for those that might be in a pinch and you're curious to see what's happening, I would do something like this. If you put none, again, it'll say you can't use this. You need a current job or future job to continue. So for the sake of this, I'll just put salary. I had it all year long. And then I would say I get paid once a month. That's just the easiest to calculate. 12/01/2024. It does require you to do some calculation. 11/30/2024. Okay. So if you know that you've made, just for ease, we're going to we'll just say $60,000 divided by 12, which is $5,000. Salary today is $60,000. This is the number that we're using. And the good thing about this, it'll show you what you're expected to make for the year. $60,000 is correct. And we're going to say we withheld. So if we're saying that we made any payments, like did we make any payments towards okay. I realize I made a mistake. But what I'm doing is we're going to say what the salary is. We're going to keep it at $1 and we're going to say this is $0 because we really just want to use this for the net self-employment. So right now we're going to say this is $60,000 for self-employment. There's not really much that you can calculate on our dollars. Anything that you get out of that will be what it is. So we are going to say our estimated taxes will be at $10,000 again. So this is the hack. Again, I don't suggest you do this because it's not going to give you the exact amount it's a good estimate, but it's just a lot of going through in the calculator. We're going to say our salary is $0.00 because we really just want to use this to calculate what our projected tax is going to be on our self-employment income. Again, we're going to say no to all these things. More than likely, you would be paying for your health insurance and all of that, depending on your scenario. But this is just a simple scenario. Put in my age and next. Okay. So if you've paid this $10,000, meaning you made your estimated payments, you can see that your estimated amount owed will be the $21.97. If you go to your information, it'll show you. Now you could just put 5,999, make it 60,000, but this is not what we did. We have this. You see your adjustments, your AGI, how this breaks down. Your income taxes, as you can see, is the 3,719, but your self-employment taxes are the 8,478. Of course, there'll be strategies that I would suggest for folks in this situation as a CPA and a tax advisor. But this is just a way for you to project what your taxes are going to be. I suggest folks that are just starting out in business, if they're transitioning from full-time employment into self-employment, this is a good way of keeping on top of your taxes for little to low cost.